Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 26th of August 2023 and we're publishing our gold and silver weekly update for the week ending the 25th of August. Silver staged an impressive recovery last week, but will it last? Let's take a look. Okay, before we look at the data, just a quick reminder, we've now set up a second channel entitled Finances Do Matter with 150 videos produced, and we are producing about 5 a week. We didn't manage it last week, but we will be doing so for certain this week, covering a whole array of financial topics. Now we've placed a link in the description box and comment section below for those who have not as yet joined that channel. Meanwhile, going back to what happened last week and what we expect to happen this coming week, gold actually went up $25 last week, rising from $1,890 to $1,915, having hit a high of 1923 and a low of 1885, a rise of 1.3%, reversing the previous week's fall almost to the dollar. In sterling terms, gold finished the week at £1,523, up £38, and in euros it closed at €1,774. That's up €33. Silver rose $1.47, rising from $22.76 to $24.23, having hit a high of $24.40 and a low of $22.75, a rise of 6.5%. In sterling terms, silver closed at £19.28. That's up £1.39 on the week, and dashes any hope that I had of it hitting £17, and in euros it closed at €22.48, up 1.51 euros. The gold to silver ratio fell 4 full points from 83 to 1 to 79 to 1. The difference between gold's high and low was $38, and the difference between silver's high and low was $1.65, higher than it's been for a short while. Now, this is what we said last week concerning our forecast. We envisage gold will trade between $18.50 and $19.30, which it did perfectly. Silver, we said, will oscillate between 22 and 24, which it did, with 21.25 to 24.50 as outliers, which, once again, silver broadly traded within our predictive range, but moved into the top of our outlier range from late Wednesday through Friday, and oscillated there. Looking at other financials, Bitcoin stands at $26,001, up $96 on the week, bearing in mind it was down a considerable $3,500 the week before. Equities were mixed, though broadly higher thanks to a late surge on Friday. The Dow Jones closed at 34,346. That index was down 154 on the week. But the S&P 500 was up 36 points at 4,405. The Nasdaq up 300 at 13,590. And the FTSE up 76 points at 7,338. Oils were marginally lower. Brent crude down 32 cents at $84.48, and WTI crude down more than Brent at $1.42, actually closing at $79.83. Dollar index is up 0.65 points on the week at 104.08. In terms of economic data last week, existing home sales for July were a little lower than anticipated, as too were both flash PMIs. Initial jobless claims fell by 10,000, and consumer sentiment for August came in at 69.5 compared with expectations of 71.2. So overall, sentiment in the economy is weakening slightly, but employment is remaining high. Fed Chair Jerome Powell's comments at Jackson Hole on Friday was, I suppose, the highlight of the week, and we'll discuss this in a few moments. Now, this coming week we have some very important data announcements. Tuesday, consumer confidence for August. Wednesday, the ADP employment report for August and Q2 GDP revision. Then on Thursday, the PCE or inflation index, very important data. Remember, you have PCE and CPI. And on Friday, we have the US non-farm payrolls. So probably the most important data week before the Fed meets to discuss its decision on interest rates, which is due on the 20th of September, which is still far enough away for this week's figures to have an effect, but not quite as dramatic as if that meeting was held in a few days after the announcement is made. Now, the key outtake from the Jackson Hole summit is Jerome Powell's restated commitment to 2% inflation, but our assessment is that he was a little on the dovish side, particularly when he made this comment, quote, "The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline," unquote. This suggests that rate increases still haven't fully fed through to the underlying economy as yet, though some governors disagree with him. This could suggest that rates will not rise in September, which is why there was a bump or rise in equities and precious metals on Friday. Of course, much depends on the PCE and jobs data coming out this coming week. Now, gold's small rally, if confirmed by a rise to $1,922 early next week, could see it quickly move to 1936 and then 1948, which are the 50% and 61.8% Fibonacci retracement levels that analysts place great store on. To the downside, there is support at $1,900, and should that be breached, then a relatively quick descent to $1,875 is indeed possible, but again we have extremely strong support at $1,850. Silver broke through the relatively strong resistance of the 50-day EMA, aiming for that extremely important $24.50 level. If that is breached, which it could be, then 25 is more than plausible. Should silver, however, reverse trend, then the 200-week EMA comes into play, resting just above $22, and where many analysts believe the ultimate floor rests. So with this in mind, this week we envisage gold is going to trade broadly between $1,875 and $1,960, though we expect it really to spend most of its time in the 1900 range, with 1850 to 1985 as outliers. Silver, we estimate, will oscillate between 23.50 and 25, possibly heading more towards the 24 plus level rather than the 23 plus level. And we have $23 to $25.50 as outliers. What do you think, though? Please share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign. Of course, I refer you again to the Finances Do Matter channel. Do take a look over there and sign up if you haven't done so. And meanwhile, we wish you a safe, enjoyable weekend and, as always, a prosperous week ahead.